Hello traders, and welcome to our first episode of how to start trading. This is going to be an educational series that we're going to do here on YouTube for the trading community because one of our main, let's say, objectives for this year is to be able to teach people, especially the beginners and the people that have not been trading for a while, on how you should actually approach things from the beginning. And the first episode is not something that most people would have expected. However, in my opinion, it's one of the most important things because unfortunately, online and in the main marketing or media you are seeing out there, most of the information, this information is hidden. There is a lot of things you don't know. So I believe that this is going to be of massive importance for people to understand. My name is Rafael, for those who don't know me. I have been actually working myself for many years in the brokerage industry. I have also worked with a market analysis firm, so I do understand things in a massive extent. So this is the main reason why I have decided to start with this specific topic. Now, as you can see from the title, we are going to discuss about majority of brokers, forex brokers. We are talking about margin trading here with leverage. And for you to understand how the industry works and the execution venues, which means when you deposit money into a broker, how your money and your trading orders are being executed in many cases. When it comes to also the broker's risk management, and we will briefly discuss about what's going on with the paid marketing and main media and uncovering the mask. You will see why I have written that. So some of the things I will discuss in this video, I will not be mentioning verbally fully some names. You're gonna see them on the screen, so it's gonna be very obvious what we're trying to say. Okay, so let's begin. So firstly, uncovering the mask. Okay, I would like to speak briefly about certain things. First of all, any forex broker should be regulated by certain authorities. Of course, many forex brokers, they also have offshore entities which they allow to work in a global scale, and some of the clients that are looking as well for specific trading conditions. Now, when a broker is regulated, okay, this does not guarantee or secure that the broker will not act as a counterparty to the client or the retail trader. You will see why in a bit. The regulators, they ensure, of course, the broker's minimum funds availability. They ensure that the broker is GDPR compliant. Let's say it follows specific things that they need to be followed in order to provide its services to the clients according to the region. Now, the regulators themselves, they know that the majority of traders will lose money in the long run. This is a known fact. Then the regulators, they do not interfere on how a broker will decide to undertake the order execution of its clients' funds. Okay, for some of you this may not be clear, but you will see in the next slides exactly what I mean. Now, at the same time, I wanted to touch upon the prop firms again, which, as you know, prop firms, they are not regulated. Okay, they provide fake accounts. You are trading actually on demo accounts if you are using a prop firm. They are selling an illusion for retail traders that they're gonna get funded, and we can give you funds to trade and we split the profit. Now, how do these companies make money? They make money from all of the registration fees of the clients because they are also using influencers to promote them. Okay, they create those trading challenges with certain rules that they do guarantee a very high failure rate. Okay, we are talking about at least 90% failure rate. So they are not really bothered if a few people will pass one or two challenges. They are not bothered to pay out, but they know in the long run the majority will fail. Their revenue will be higher because of all those registration fees, and they do not have any execution to the real market. All of they doing, they are actually getting API data from certain brokers on demo accounts. Okay. Now, what people need to understand is sometimes there needs to be some logic thinking. Now, who is going to give you the real money to trade without knowing you personally and your track record with your trading stats? Okay, so this is what you need to understand when you are actually looking at prop firms, because nobody will give you real money to trade if they don't know who you are, they don't know your trading stats to take this risk and give you money to trade, you know? So there you go. Now, on this slide, I will start with a spot market, and this is there is a specific reason why. Okay, because this is easier for you to understand before we go to the broker section. Now, I have been personally into the sports betting market, specifically for football, in the last couple of years before I actually entered the trading industry. And I also know, and I had experienced when a specific bookmaker has limited my staking ability because they didn't like me as a client because I was in a profitable situation. Now, you have to understand first how a market is created, right? Which is an exchange versus a bookmaker. So this is a clear example from the sports markets, okay, specifically in football. So on the left side, I have put a screenshot of one trading software called BetAngel. This is linked to one of the exchanges of Betfair, for example. Now, on the exchange, okay, you can see the different markets with their prices, and you can see one side and the other side of the market, which is, let's say, in trading, we have, let's say, buyers and sellers. And you can see how much in volume it has been actually matched. Okay, this is a real market right here on the, on the left side. This is a real market. Okay, so if I lose, another person will win. If I win, another person or people will lose. Okay, so there is no conflict of interest here against the provider and the actual people that are betting or trading this market. Okay. On the right side, it's a screenshot from a company called B365. Okay. Now, this company, as you know or may not know, it's a bookmaker, which means the markets you see here, okay, they are not in the real exchange, which means if you are winning, this company is losing funds. And if you are losing, this company is making money. Okay? So if you are good and you are making longer term, you are longer term profitable, they will suspend your staking ability. They will find a way to kick you out in a legal way. Okay? So this is why I wanted to start with the betting markets, because they are simple to look at and understand the differences. So now we will translate this into the Forex brokers. So as you can see, I have titled this main media brokers. Brokers with some of them, they have their own in-house trading platforms. Okay. So here it's a list of some, because this list can get very big actually, brokers whereby the retail trader can only trade against the broker funds. So the trading execution of your money in these cases, it's like a bookmaker. It's not the real market. You are trading in a simulation actually. Now, these brokers right here that I have listed specifically, Okay, there are some of the brokers in which when you are losing money, they are making money. And when you make money, they are losing money. It's a direct, let's say, bookmaking industry in these brokers, okay, on a simulated trading environment. Your money is not being actually sent to liquidity providers and let's say the real liquidity pool, okay? So this is how they operate. In my personal view, if I'm trading or if I want to put my money somewhere, I need to know that the broker has the capacity and capability to link my orders into liquidity providers. Otherwise, some of these brokers, and I know this with certain cases, some of these brokers, they will actually do some stuff, let's say sometimes, okay, when they don't like someone, okay. Possibly this didn't happen to anybody of you, because obviously you haven't reached the level that this may happen, but I'm just giving you, let's say, a heads up that this, on the left side here, they act as a counterparty and a conflict of interest against your trades, right? Now, I have attached here a screenshot from Reuters from 2020 when this company P500 shares fall 10% after big revenue hit from client trading wins. So you can understand exactly what we're talking about. So let's read really quickly here. So online trading platform P500 said on Monday that lost more than half of its quarterly revenue to customers generating unusually strong trading results, sending its shares down more than 10%. The company, which kept its annual outlook unchanged, said its second quarter revenue surged to 249 million, but the trading gains reduced that figure to about 102.5 million. Now, unlike many of its peers who act as go-betweens for customers to make bets on the financial markets against other institutions and traders, P500 makes markets for its customers. This means if the customers bet correctly, more than incorrectly, it can lose money. Okay, so now you do understand why I started from the sports betting markets and now why we are looking at the forex brokers. So you can understand exactly how these specific ones actually work. Okay, so when you lose, they are happy, they make money. When you win, they don't really like you, they lose money. Okay, this is very crucial to understand. Okay, a few more examples. This doesn't mean specifically that this one I'm showing to you specifically does the same with the previous, but the reason why I'm showing this is to show you, because many of you may be thinking, but it's easy to use their in-house trading application and stuff like that. Look what can happen in this specific case of this company. Okay, you can read, I don't need to say names. May 2022, January 29, 2021, tech crash. The trading platform faced a backlash of hundreds of customers on Thursday afternoon after its mobile app and website crashed, leaving many users stranded and unable to close their trades for more than an hour. Okay. This one specifically, again, platform crashed, leaving traders unable to close trade, and nobody is answering the phones, while I Group responded immediately to finance feeds once we began to investigate this matter, denying the issue raised by clients. Okay, imagine sometimes this can happen. However, sometimes this is intentional. when they are in bigger risk than they usually want to take. So it's very important to understand how certain things work within these specific brokers. Now, another misconception of many beginner traders or retail traders in general is TradingView. Now, TradingView, it's a charting software, which means we are using it to analyze charts, to set up some indicators, to do an analysis and stuff like that. It's not designed, actually, it's not a broker. So we are not coming to TradingView to trade. We are coming to analyze charts because it's more let's say convenient. We can add different markets. We can customize the chart. So it's a really good tool for tracking the charts and do the analysis. Now, the charts on TradingView, some of the charts are from specific brokers, okay? But it doesn't mean you need to trade with that broker to be able to trade on a specific instrument. So in this picture here, it's a dollar index chart, which is provided by capital.com, okay? Now, it doesn't mean I need to use this specific provider if I want to trade on dollar index or any other market. I can use any of the, let's say, better brokers, which we're going to discuss. What I mean by better brokers, I can use a broker that I know that it doesn't have a direct conflict of interest against my trades, and of course, if you are a long-term profitable trader, you are a good trader, whatever is the case, you know that you are good. They actually have set up liquidity providers that they undertake your trading risks. So the broker makes money with you through some of the spread or commission, and it doesn't actually get affected negatively from your personal profits. Okay. Now, another thing I wanted to mention for TradingView, the fact that adding an additional third party for trading execution, it actually makes it even slower, and you are actually getting access to a fake market execution. So most of the brokers you will see on TradingView, they act as counterparty. You are just opening and closing trades on a fake simulated market, and your trades are not linked into the actual liquidity providers and real market. Now, we will discuss about paid marketing and why it's so big, because it's the biggest investment of some of the brokers. The majority of online information is not showing the truth. I will explain why. Now, like I said before, these specific brokers that use a lot of funds for marketing, usually they are acting as counterparty against you, so they don't like it when you win. They bet on the fact that 90% of retail traders will lose money in the long run. Okay. And they pay more to get higher rated reviews on broker review websites. Okay. Now, what you need to understand is some and a lot of these broker review websites, they actually blackmail some of their brokers. So, for example, I know personally from a website called W something FX. I'm not, for discrete reasons, I'm not saying it. They actually hunt and they go after brokers and they ask them for more money to get higher rated reviews on their site. And sometimes they go as far as to add some fake negative reviews as well to create conflict, and they look to to get paid more money actually. So this is very important to understand how this specific broker review and marketing works. Now, whoever pays the most gets better reviews in many cases, not necessarily always. The goal of some of these brokers is to attract the majority of retail traders to trade with them, because they expect that 90% in the long run will end up losing their funds. And some of them, you can see they are buying into famous football teams slash players to attract new retail traders and build fake trust. Okay. So I hope this is very clear. Some of you may already know this, but this is mostly for the people that are new into trading or they're looking to get started, or even for the people that have been trading for less than 3 to 5 years and may not know this information. So I really hope that it makes sense. If you have any questions, you can leave us a comment or you can send us a direct email. Now I will explain to you how things should be, okay, with the liquidity providers. Now, firstly, brokers, real brokers, should have an experienced risk management team, and here's why. They need to identify the client's trading strategy or the flow. They need to be able to identify potential market manipulation or abuse, and they need to distribute or execute the trades to the right liquidity provider, okay? And always look to provide the best pricing and execution to the clients, and to not look to punish the good traders. Okay? Act in fair, transparent, and good faith with their clients and have a good communication. That's the most important thing. Now, what are the liquidity providers? Where actually the brokers are hedging the risk of their clients. Now, the liquidity providers can be several types. The most common type are banks. For instance, you can have banks like Barclays, Swissquote, let's say JP Morgan, Goldman Sachs, so on and so forth. These are, let's say, banks where they can actually make an agreement with certain brokers to undertake trading orders and risk. Then also we have the hedge funds, mutual funds. Mutual funds is actually related to the brokers that actually they use their own funds to trade, to take the risk against the traders. I just put it here because some of these brokers we've seen before, they may advertise they have liquidity provider, which is their own mutual funds. Then another type of liquidity provider can be private company. There are certain private liquidity providers as well. And lastly, other brokerages or trading desks. So sometimes some brokers, they may send some order to other brokers to hedge risk, which can also act sometimes as liquidity provider. How it's done, it's from bridge technology through MT4, MT5, or any other third-party trading software, which has very fast connectivity, and they can link the orders to these liquidity providers, which means that if you are making profit, the broker is not losing money. It's actually the liquidity providers who provide the actual liquidity of the market. So in my view, this is what people should be looking at, and they should be looking to trade with a broker that can support that, so they know that they're not going to have an issue in the long run if, of course, they wish to become a good and successful trader, regardless of the funds, regardless of where each body is starting. This is the most important thing. And at the end, as you will see, we will show you what we personally use and what we personally know for a fact that you will be good to go. Okay. So as you can see, One Royal and IC Markets. Okay. Now, for us personally, when it comes to the overall comparison, One Royal has a lower trading costs than IC Market because the VIP accounts specifically as well, they are actually one of the best in the industry. There are more instruments available with One Royal, specifically shares and ETFs as well. Canadian residents are accepted with One Royal as well. And most importantly, we have personally have a deal with them, okay, that they can provide to us a cashback program for our personal traders and clients that they will sign up with our link in the description. Now, if you sign up with the link in the description, you will be qualified when you are trading with One Royale. At the end of every calendar month, according to your trading closed volume, you will receive as cashback up to about 20% of your total trading cost, which includes either spread or commission, depending if you're going to use the classic or ECN account. Okay. If you have any questions, again, feel free to let us know. We have our email in the description. You can leave a comment, but for more private questions, we would prefer to send us an email, so we'll get back to you within 24 to 48 hours. Okay, so I really hope that this first episode was educational. It actually opened the eyes of some people. And on every Friday, we will be uploading the next episode on how to start trading. I don't know how many episodes will be. In the next episodes, we will be covering things like the leverage, things like trading execution and stuff. So it's going to be very beneficial for anybody who is a beginner as well, or is looking to learn a little bit more before actually getting started with trading. Okay, so thank you so much for watching, and I'll see you in the next video.